Cheers to another trading day, retail trading team. This is Mastro, and this is your routine briefing from the new and improved office, which is really the same exact floor plan, just getting away from some problematic upstairs neighbors. A quick public service announcement before we begin today. If you do have kids, especially if they're twin boys, it is very polite not to let them ride their tricycles around the house all hours of the day, and also not to bang on the ceiling while screaming at the top of their lungs. That is really appreciated by those of us who are forced to leave their homes and move to the exact same home after spending $2,000 to move, and all the various other fun things that come with that. So just with that quick public service announcement, we're going to jump right in to today's routine briefing. In terms of trading today, I have personally not had the chance to trade just because the market hasn't given it to us, which is fine because I spent the last 45 minutes here trying to figure out what was going on with the sound for the puppet show, and I learned that I did not have the speakers plugged in. So I guess that is some karma for the various boomer jokes that I've been spewing at our friend OJ for the past, well, past couple years. So that aside, we're going to jump right into the charts here, see what we got going on, and just kind of get our bearings for tomorrow. Like I said, today I will return for that 2 o'clock session, yet I did not get anything in the morning session here, which again is fine, thanks to the good old inability to plug things in, I guess. So let me switch screens here, and we will see what we got going on. Okay. Maybe. There we go. Okay. So what you can see here is really just the market trying to find balance position for tomorrow. We have seen really since the 18th of July here, we've been caught in the same area of potential balance. We have not filled that gap above at 455, and that is really, I think, the major upside magnet for now. And I'm going to, sorry, I'm just getting my various camera angles going here. Tried to test this out last night a little bit, so let me just see what we got going on here. Okay. Do that, switch to the notes, have a party. So really the main thing that I'm looking at today, if you want to check out my Twitter at Routine Trader, you can see those major points. And also, I will pack this up in the newsletter, which is obviously being sent out when the day is pretty much over. But still, these levels are going to be important for today, obviously, and then going forward into tomorrow as we see what FOMC has in store for us. So the levels are pretty clear. So I think it's easiest to see if we look at our 4-hour chart here. We don't even need to get too granular. This is on ES, but I present the levels in SPY just to keep it nice and consistent. So really it's that 455 gap, which you can see on that dotted line on your screen there. And that's going to correlate to, let me move this down just a little bit so you can see the ES level. That's going to correlate to about 45.95-ish on the ES. That is the opening, or that is the gap from a Globex open a few sessions ago. And that is really, I think, that upside magnet. We'll see if they fill today before FOMC. And if they do, by the way, we'll be breaking out of this kind of ugly triangle that we're starting to build here. So we'll be watching what happens around there. I personally did like, at least in the morning, initial fade of that gap. Again, I do not mess with the 11 a.m. until 2 p.m. Eastern time window for trading, just because there's a lot of chop, a lot of traps, and I feel like the edge is diminished. And yeah, so I don't get involved. So potentially we'll be looking to see what happens at about 1400 Eastern today. Yet until then, just kind of minding these levels for tomorrow if we don't have an opportunity to present itself today. So 455 is that gap above there, and then obviously looking toward the high at about 456.50. OJ's popped to the chat to defend himself. That is one way to describe that generation. For sure, OJ. Definitely clinging on to your youth there a little bit, and I do respect that. And like I said, I have to give you at least 15 minutes as I didn't have my speakers plugged in. So who am I? Who am I to talk smack, as they say? So anyways, 455. That's the gap. Looking for a potential breakout. You can see that magenta line above there at it for about 456.50 on the SPY. Again, always looking for that initial fade, looking for that trap. Yet if we do have time and volume and about 5 points of acceptance, I think you do have a potential breakout trade there. Again, would be really surprised if we see anything meaningful just based on how the morning trade has gone. I think a lot of this is really just dependent on what happens tomorrow. So that is really the upside level. Looking at that gap downside, we go test kind of the edge of this triangle here, that green horizontal about 45.70-ish. That is a decent spot to look for a reclaim, and then at that 45.60-ish level as well. Again, I dotted that 45.60-ish level because it's also potential breakout trade to the downside, but really 45.60, 45.70 is still pretty choppy, low probability trade to the downside. We really need to get to that 45.40 area, which correlates to about 452 on the SPY. Well, 452 on the SPY is at 45.60, 45.70 area. I apologize. So watch what happens there, or if we do get that pop down to 45.40 on the ES. Again, I'm packaging all this up in the lovely newsletter, and you can see that tweet that has the notes there. It's pretty complex, very complex, not pretty, quite complex, and not pretty, in fact, the look for today and going into tomorrow. So just really watching these levels as they apply to then, given the morning's trade, or lack thereof, I should say. So that 45.40 is going to be that bullish line in the sand. It's also the nice little bearish breakdown trade. If we do get that pop down there today, tomorrow things are a little different, but we get that pop down there today, I think it's a decent short if we do start to see a sell. So tomorrow, FOMC in the morning, I will not be. Sometimes I'll participate on the pre-FOMC morning trade, just given the the 2 days preceding it, yesterday and today. I gotta think that the morning trade is going to be pretty untradeable tomorrow. So I'll be watching for the FOMC move and always watching for those traps one way or another. I will not be looking for any breakout or breakdown trade, at least initially, for that FOMC push. Let's see what Mr. Juiceball, the not boomer Gen Xer, is saying in the chat here. I agree with you, OJ. It's the downside is really, let's just talk about why I agree with you. Is this silly little thing, volatility, or again, lack thereof. Until we're above 1620, there is no chance. I shouldn't say there's no chance. I guess you could see something wacky, but there really is no good case for any sustained sell until we have sustained time and volume on the VX futures above 1620. Yeah, and I agree also, OJ, just sentiment-wise, unless there's something very significant, perhaps the big boys will use it as a catalyst to sell, but really, this market has no fear, and it seems to be just settling in for a nice choppy August, perhaps reminiscent of April. Hopefully not yet. Again, that's kind of what it's looking like. So, again, big picture, 45.60. I guess you could bring this down a little bit. Heck, I'll bring this even down to that poor low. This entire zone here, and arguably a little bit higher, depending on how we navigate that gap, all chop, all potential balance, and we really need to see a big break one way or another. Again, for like the fifth time, not looking for those breakout looks, definitely looking for those traps until you see time and volume one way or another. So that is the more granular price action. So really boils down to what's going on in that /VX until it's above 1620. Nothing to speak of. Yes, it's trying to reclaim that low it made, which is still pretty meaningless. It's nice to see that it's not at least breaking through that triangle structure that you see, yet it's not breaking above either. It did make a lower low today, so until that hits 1620, until the bulls lose 45.40 or the bears lose 46.10, trappy, looking to play those reversions back to the center of balance somewhere around here. Yeah, definitely favoring those long trades for that breakout if we do get that opportunity. So just to kind of look at the state of everything and really supporting that bull case is starting on this weekly, SPY weekly chart. You can see we have a cluster of horizontals. Those are the swing highs and lows from the 3-week swing and 3-day swing. And that is why I think we're chopping around. So looking for that potential breakout higher, especially as we stay above this white trend line here from that October 13th low. A loss of that 45.40, really that 45.60 lower probability trade is kind of a push below that trend line again. will likely be trappy, yet if it's not, that's when we can really start to sell and start looking for that gap area. So just to flash the daily, I'm going to come back to the weekly here. That gap area down here, yellow dotted and white dotted, 443 to 445 would be that downside magnet if we do have a miracle known as a sustained pullback. Definitely, OJ, it's been an iron fly market at least since the 18th, and it's really been a pretty good iron fly market. Even while it was trending, I think a lot of people made decent money on those flies, so it's good for you 0DT option sellers, and there's always opportunity if you're using multiple instruments. I think that's a really good indicator of that. So this is a daily chart showing that magnet to the downside, showing how overextended we still are. So going back to the weekly, you can see if you look to the right there, that shaded area is the top of balance, and we have been in a state of imbalance for really 3 weeks now, at least, potentially 4 weeks now, really, just kind of in that state of imbalance where the bulls do have complete control, and that's why you're seeing all the dips being bought very aggressively. So until we go and retest that, remember, and definitely as long as we're above that October 13th trend line, any short trade, which is why I keep emphasizing their low probability, you are fading a very strong trend. So it's notable how extended we are relative to that 4 standard deviation VWAP. I was telling OJ I went back, so I extended this data all the way back. Let me see how far back I went here. Yeah, so all the way back to before the .com crash, I guess you'll call that. I pull back, really more of a crash in NASDAQ. And since then, so this is about 25 years now, we have never, ever, perhaps on a percentage, so I shouldn't say it that definitively, perhaps on a percentage scale, yet definitely in terms of a raw dollar amount, have not been anywhere close. Let me go back here if it'll let me. Have never been anywhere close to as extended from this top 4 sigma VWAP as we are now. So we are in a state of extreme imbalance, yet we are also in a state of extreme overboughtness, in my opinion. All the Twitter gurus, many of which I don't think have ever placed a trade, are pretty convinced that we're not that overbought, we're in a new bull market, so on and so forth. Yet I have found that the VWAP to be a very reliable indicator in general across all instruments, especially on the higher time frames. And right now we are in la la land, as they say, relative to that. So we'll keep that in mind. Yet until we lose October 13th trend line, at the very least, the bulls are in control. But just something to kind of keep in mind on the back burner there. It's pretty cool just how overextended we are right now. So just going to flash the VIX one more time because I think this is actually the most important chart I'm watching right now. Bulls of control above that trend line, bulls of control until we get some time volume above 1620, and that is really the state of things. So for tomorrow, I will send out a brief newsletter / video right before FOMC. I don't expect too much to change, so it may just be very similar to what we see today, unless something does happen at some point today, but I would not hold my breath for that, just given what we saw this morning. So just a quick reminder of the various indicators that we have going to today. So the inventory overnight, neutral balance, no surprise. I need to correct this. We did have that open test drive on the bull side for the morning. So the bulls are complete control, I think, until we go back below that open, which, just to refresh itself, because I don't even remember our opening price, is going to be somewhere around that 45.80 area. So even more counter trend than before. So I need to add that open to our 4-hour chart. As you can see, when I copy these chart drawings from the 4-hour chart to the structural chart, they do look a little bit different. The 4-hour chart is the one that matters. That's the one that I put in the newsletter, which, by the way, if you're not a subscriber, retailtrading.com, that will be there. And I'll keep that screenshot there for you, and I'll make sure to send a new one out tomorrow. By the way, this little document I just flashed, if you're not familiar as well, is a warm-up document. That's what I'm referring to, which you can also find in the description to this video, as well as this cool little resource folder that has my various strategies and, most importantly, this routine day trading document, which links to exactly what I'm doing, what I'm looking at intraday here. So that's what we got going. I'll keep these levels updated, see if we can't get some interesting look yet again, I think it really comes down to tomorrow. I saw OJ had a pretty good analogy earlier. It's Christmas Eve, so nobody wants to open the presents too early, at least yet. So we will see what happens, and I will see you then. I'll follow up with the newsletter now, and I will be available in the comp section of this video as always, as well as on Twitter at Routine Trader. So I thank you for your attention. Mr. Juiceballs, excellent to see you in the chat. Thanks for hanging out, and everybody stay classy until tomorrow.